2024 is now 45 days away from coming to a close, and the presidential election now in the rearview mirror, our sights are now set to 2025. How is the housing market going to react to the presidential election? How is the housing market going to react to the interest rates and the constant fluctuations that we're seeing? And what can the current housing market tell us about what to expect going into 2025? Coming up on this Silicon Valley Snapshot. It is no secret that the Bay Area real estate market has been wonky for the last couple of years, and so much unpredictability in the current market. But in times like this, it's healthy, it's important to look back at previous years and see how historically things have behaved over the last 10 years or so, and compared to where we're at right now, and use that historical evidence or use that historical data to come up with some conclusions about what we could expect going into 2025 and beyond. But before we do that, before we get into the data, if you're a home buyer in today's marketplace and you're looking for data to help you with your home buying decision making, what should I offer on this house? Should I be offering over list price, under list price, and all of the different data points that your heart could desire will be included in this data report when you text the word data plus the zip code or the neighborhood or the area that you're looking in, and we will get that data report sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to figure out, is now the right time to sell my house? And if I do, and when I do, what should I be pricing my property for, etc.? All of those questions will be answered when you text the word data plus the property address to the number down below. If you watched last month's snapshot video, you probably got a sense that the market was heading in a buyer's market direction, meaning we were starting to see more inventory come on the market and less people buying houses. Demand was going down, supply was going up. And I said if these trends continue, we could see a bit of a buyer's market heading into 2025. Well, guess what? Spoke too soon, because here in November, we're starting to see those trends already correct course, starting with Santa Clara County. In Santa Clara County, so we have 1,165 homes active on the market and 1,051 homes pending. Now, if you compare this to last month in September, we had 1,300 homes, not 13. Wow, that would be very little, with 1,300 homes on the market and 898 homes pending. So again, we're starting to see that delta decrease, and that is indicative of a more seller-friendly market. And that is not so great news if you're a buyer heading into what is usually the most difficult time of year, which is the spring market. So winter market is here. We're in the midst, in the thick of the winter market, and we're starting to see signs of a strong seller's market potentially. We'll get into that more in January and February and beyond. Now, heading up to San Mateo County, same trend, just a little bit less dramatic. 578 homes on the market, 427 homes pending. So again, we're starting to see that delta decrease a little bit between active inventory and pending sales. Heading on over to the East Bay in Contra Costa County, we have 1,372 homes active, 836 homes pending. Now, again, the trend is the same. The trend is the same that we're seeing in Santa Clara County, but the trend in Santa Clara County is much more pronounced. So in the East Bay, we are seeing the same trends, but it's a lot less dramatic than it is in Santa Clara County. And that just comes back to the idea or the concept that I've really preached on this channel for many, many years, which is Santa Clara County, specifically, before it used to be Palo Alto, right? But now it's really come down to that Cupertino, Sunnyvale area. Cupertino, Sunnyvale, parts of Mountain View, right? And maybe parts of Santa Clara and Willow Glen. But really that Cupertino, Sunnyvale epicenter is where it is like ground zero, right? For all things real estate in the Bay Area. And it kind of just radiates outward from there. So the trends that we're seeing in Santa Clara County are always going to be a little bit more pronounced. Whatever happens there will happen in the East Bay, but it won't be as drastic. So when prices really go up in Santa Clara County, the East Bay will feel that effect a little bit, but it won't feel it as much. And that's just because Sunnyvale and Cupertino, those are the most desirable parts of the Bay Area as it currently stands, at least in the South Bay. And again, same thing in Alameda County. 1,317 homes active on the market, 848 homes pending. So same concept here, where we're starting to see that delta decrease month over month, and same thing that we saw in Contra Costa County, right? So it's basically the same story in the East Bay. And again, this just reiterates the point that right now in this type of market, in this type of environment, we don't expect the East Bay to perform as well as Santa Clara County. The volatility in the East Bay has always been higher than Santa Clara County. A lot of people like to buy there because the schools are great and it's a really good value for your home in the East Bay, but over the last couple of years, the prices became super hyperinflated in the East Bay. And as a result, you're seeing less buyers, less demand in that area right now. And prices aren't rising as quickly in the East Bay as they are in Santa Clara County because of the hyperinflation period that happened a couple of years ago when homes were getting bid up in the East Bay $200,000, $300,000, $400,000 over list price every single month. I know what you're thinking already. All right, Danny, that's great, but tell me, how is this new presidency, how is Trump being in office going to affect home prices here in the Bay Area? How are the fluctuation in rates going to impact Bay Area home prices? And those are all great questions. And it's a very fair question to ask because there's a lot of uncertainty right now. Even though, the election is over, there's still a lot of uncertainty when it comes to the economy. I think that there's a lot of people who are optimistic, right? But then there are also a lot of people who are pessimistic, right? As I mentioned before, right? 50% of America will be happy, 50% will not be happy and be doom and gloom. So what I did was I went back in time and looked at previous times in the Bay Area housing market over the last 10 years where we've had a fall similar to the fall that we're experiencing right now. The first one that comes to mind rather, is the fall of 2014, which is here on your screens. And you'll see that here in 2014, and by the way, this is for Santa Clara County, but these trends were seen all across the Bay Area. So if you pulled Contra Costa, Alameda, things would look very similar just in terms of like the overall trend lines, right? So bear with me. But here in 2014, you're seeing, all right, well, we had a slower fall. We had a fall kind of similar to what we're experiencing right now, where we had, we had more inventory than we did demand, which, as you can see, clearly wasn't the case as we went into 2015. So at some point in October, you see where that delta starts to converge, very similarly to what we saw previously on that previous slide with Santa Clara County, where we see, a September where inventory is far outpacing demand. And then in October, we see that delta start to shrink. And then eventually by December, complete reversal, a complete turn of the tides where pendings outpace supply for the first time in quite some time. And that was really the first time that we started to see a really strong seller's market in the Bay Area after the 08-09 crash. And so this was a very special time, very unique time in the Bay Area housing market, and then eventually became the norm, right? It became the custom. But this was a 7-8 month ride where we had pendings outpacing supply in 2014. All right, so 2014, interesting to note as well that in July of 2014, as you can see on your screen here, where we're starting to see that graph take shape there, supply was still heavily outpacing pendings at that point. The interest rates were at about 4.13, and then in April of that year, they had come down about a half point to 3.67. So clearly those drop in rates kind of boosted the market, and it didn't take a massive swing in rate. It just took about a half point swing, which, isn't a massive decrease, but it was enough to stimulate the market amongst many other things, right? But it was one of the things that helped stimulate the market in that time. All right, great. So let's move on to another time in 2018 and 19. So if you look at this graph right here, 2018 was one of the first times where we saw the market really slow down really quickly here in the Bay Area. And the graphs you can see here in September of 2018, inventory levels way outpacing demand again in October. And things really didn't get any better as we headed into 2019. So you can see 18 into 19, we had a very slow start to the year in 2019, and it didn't get any better. The entire year was fairly slow in 2019. And despite interest rates coming down an entire point between October of 2018 to July of 2019, if you see in October of 2018, we had the interest rate was at 4.83, and then in July of 2019, it was at 3.77. Despite the fact that rates came down a full point, nothing happened to the market. But then we all know what happened at the beginning of 2020. We started 2020 off with a bang. And of course, we had that whole COVID thing happen afterwards. But after COVID kind of settled, after those wonky months in April and May and June and July, we hit the ground running again at the end of 2020 into 2021 into 2022. We had basically a 24-month run-up on prices from July of 2020 to July of 2022. And so when I look at a couple of things here, which is the current state of the market from just a numbers perspective, and then everything that's happening outside the market, there's lots of reasons to believe or suspect that the market is going to behave very similarly to how it did in 2014 going into 2015, as well as 2019 going into 2020. The first one being that in both 2014 and in 2019, we saw pendings and supply we started to see those lines converge a little bit, right? We started to see that delta grow smaller. And so that was indicative of the future seller's market to come, right? That wasn't a seller's market at that point, but then in the beginning of 2015 as well as the beginning of 2020, we saw a massive acceleration in the market conditions. And I believe that there's a lot of reasons to suspect that will also happen this time. Of course, there is so much that could happen between now and next spring that could change things. The interest rates are something to keep in mind. Although, if we learned anything from this, is that interest rates are not necessarily corollary, right? There's not a one-to-one correlation between rates and not necessarily prices, but rates and market conditions, right? So the rates didn't necessarily heavily influence the market conditions one way or the other. As you could see here, there are times where rates came down, market responded. Other times rates come down, market doesn't care at all. And over the last maybe 6 months, 12 months or so, there have been fluctuations in the rates where we'd expect the market to go one way or the other, and it stayed fairly stable throughout the peaks and the valleys. And so unless we see some drastic changes to the rates, I do believe that the market is going to behave independently of what happens with the interest rate market over the next 6 to 12 months. These little, eighth of a point, quarter point fluctuations aren't going to do much to the market conditions, but I do think that there are other factors that will play into how the market behaves over the next 6 to 12 months. And historically, it looks like the behavior from a numbers perspective at this point in time is indicative of a strong seller's market to come in the early part of 2025. If you made it this far in the video and you're not yet subscribed to this channel, what are you waiting for? Click the subscribe button, hit the notification bell, give us a thumbs up to get notified every single time we drop a new video just like this one. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next video.